Cost concepts. Cost structure means the expenses that a firm must take into account during providing a service. First is direct cost. It includes labor costs, material costs, equipment costs, and subcontractor costs. Second is indirect cost. Costs that are not directly accountable to a cost object. Indirect costs may be either fixed or variable. It includes project overhead cost like site utilities, supervisors, housing and feeding of project staff, parking facilities, offices, workshops, stores, and first aid facility. Third type of cost is variable cost. It is a cost that change in proportion to the good or service that a business produces. Fourth type is fixed cost. It is a cost that does not change with an increase or decrease in the amount of goods or services produced or sold. It is an expenses that have to be paid by a company, independent of any business activity. Types of material. Raw materials, materials utilized in a production or fabrication process that require a minimum amount of processing to be useful. X. Natural gravel. Bulk materials. The steel product can be considered to be a bulk material in all of its various forms, including sheet steel, steel bars, steel pipe, and structural steel shapes, such as wide flange beams and angles. Fabricated materials, bulk materials transformed into custom-fit items for a particular product or project. For example, the bulk material of steel pipe is transformed by fabrication operations into custom dimensions for a particular use. Engineered or designed materials, it constitute a category requiring substantial working in order to attain their final form. It may consist of many components and subcomponents that end with a completed product. Classification of labor. Direct labor, the labor involved in the work activities that directly produce the product or complete the installation being built. Indirect labor, the labor needed for activities that do not become part of the final installation, product, or goods produced, but that are required to complete the project. Overhead labor, the labor portion of costs natural in the performing of a task, which cannot be charged to or identified with a part of the work, therefore, must be handled as a business expense independent of the volume of production. Types of labor rates. First is base wages. The amount that will go directly to the employee. Labor usually paid on an hourly basis. Supervision, support staff, and engineering, etc., often are paid on a weekly, bi-weekly, or monthly rate. Second is paid time off, PTO. Most employees have additional benefits of time off for local and national holidays, vacation, and sick time. In developing a unit cost for labor, a factor is added to increase the estimated and booked cost per hour worked each week to cover PTO. Most companies transfer this money to special fund to be used when an employee takes paid time off. Third, medical and life insurance benefits. Some firms and labor contracts include contributions to a medical and life insurance program. These costs usually can be calculated on an hourly, weekly, hour work cost. Fourth, government-mandated benefits. These benefits include such items as government retirement funds, unemployment insurance, retirement healthcare insurance, etc. Variables that affect residual value: initial cost, maintenance, use, wear and tear, population, age, economy, changes in technology, foreign exchange, tax laws, legislation, regulation, location of equipment, method of sales. Type of costs. Opportunity cost. An opportunity cost represents the foregone benefit by choosing one alternative over another. Similarly, other economic decisions need to consider foregone benefits for an accurate analysis. Book costs. Book value of an asset is the value at which the asset is carried on a balance sheet and calculated by taking the cost of an asset minus the accumulated depreciation. Book value equals total assets, intangible assets, liabilities. Sunk costs. It represents funds already spent by virtue of past decisions. Since these expenditures are in the past, by definition, they should not influence current decisions. The past expenditure, however, is considered to be a sunk cost and is ignored in current and future decision-making. Incremental costs. Incremental cost is the increase in total costs resulting from an increase in production or other activity. Cost change concept. Inflation. It is defined as rise in the price level of a good or service. Deflation is the opposite of inflation with a fall in the general price level for goods and services. Escalation. It is a technique to accommodate price increases or decreases during the life of the contract. An escalation order escalation clause is incorporated into the contract so that the purchaser will compensate the supplier in the event of price changes. Common depreciation methods. These escalation and escalation clauses help to shield both the supplier and the purchaser from unpredictable cost changes. And third method is sum of years digits method. Economic analysis technique. There are a variety of economic analysis techniques available to enable accurate choices between competing alternatives. The general principle is that there are competing alternatives and the goal is to choose the alternative with the highest return. In order to analyze returns from difference between costing and pricing, there are a number of techniques. Costing is the process of applying